Today, we will look at the job market and how it is affecting your investment environment, and we will begin right now. In the United States, they have had 2 consecutive negative quarters of GDP, which normally would mean the recession bell should be tolling. However, it isn't. The National Bureau of Economic Research, or NBER, has not called a recession, and that has some scratch in their heads. But we have had 2 negative quarters. What's going on? Surely that means a recession. No, not really, according to the NBER, because negative GDP is only one measurement of the overall economy. Both the job market and the fact that people are still spending has turned a potential recession on its head for now. So what is going on? What is sustaining the jobs market when all indications are that we should be seeing unemployment rising? Before we join the job market, let me know in the comments what your very first job was. In my case, I had an after-school job working in a daycare. It was pretty cool. I also want to extend to you all a massive thank you for spending some time here today as we make this the home of free financial content. So be sure to subscribe as you do not want to miss a single moment. So what exactly is going on with the job market, and exactly how is that impacting us as investors? This is a really good question, and the answer is not as simple as we would like. There are many things going on that is causing an inflated job market. We have everything from the pandemic, a great resignation, and a baby boomer retirement move. The pandemic was something most of us had never seen before, and as we moved into lockdowns, many of us found ourselves at home, removed from the job market. It was a temporary vacation from working for many. And with the pandemic supports from the government, many low-income workers were making more money than ever. Holy banana bread. With no real end in sight to the supports, many people began to reevaluate their position in the job market. There was an opportunity to learn new skills, to gain better qualifications, so on the other side of the pandemic, they could look at moving into better jobs. It is easy to see that this could spell trouble for the minimum wage jobs that would need to be filled once the economy reopened. The Great Resignation had begun. I am one of those people. Before the pandemic, I was working in a print shop, and as I had time at home, I went into deep research mode and I really immersed myself into finance. And that, of course, eventually led to this very channel you're watching. I am, as a result, not in the normal job market, as I work full-time on YouTube and support myself with profits from swing and day trading. Not everyone moved into a career on YouTube, but the overall gig economy is absolutely booming. Uber and Lyft have seen a steady increase in the number of people offering services on their networks. Many people also have flocked to online services like Fiverr and Upwork. Not all of the increased gig work is people who have left the traditional job market, as many are using them as an extra side hustle to enhance their overall income. I am a huge fan of side hustles, as that is a fantastic way to fund your investments. And this takes us to the baby boomers. The boomer contribution to the job market issue is not pandemic related, though the pandemic may have helped to accelerate the problem. It has already begun. Baby boomers have been exiting the job market, creating oodles of job vacancies that are not getting filled. This is not a problem that came out of the blue. In fact, it is a bulge of workers heading for retirement that we have been aware of since, well, all those babies were born after World War II. The process was already underway as the pandemic started. Many folks over 55 began to look seriously at retiring early, and many did just that. Well, the ones able to afford it, those who know how to invest is my best guess. The baby boomer reality for the next decade is that we will continue to have more people leaving the job market than young people entering that same market. This is the new truth that we will need to develop solutions for. This is a scenario that is ripe for more automation and an increase in the robot workforce. This net loss of workers will contribute to continued job shortages, and that will continue to be a big contributor to inflation. Where is this all leading to, and what are the impacts for us as investors? The job market shortages, especially in the production sectors, is contributing to inflation, and with people struggling to make ends meet, it does lead to less money for investing. That does not mean the market is doomed, as the market always will find an equilibrium, and there are always opportunities to make money. In institutional investors are still hard at work trading, and they are not about to exit the market. We will ride out this bear market, and we will get through the eventual recession. Ironically, in some ways, the increased unemployment from a recession could help with the boomer net worker losses and give us time to prepare for the other side when those net worker losses become relevant again. One absolutely solid benefit of the net worker loss in regard to the recession is that we more than likely will not have a very bad recession, and it may very well not be too long either. The recovery will come quickly, and things will look better on the markets as people begin to have faith in the economy once again. Inflation will go down thanks to rate hikes and that robot workforce, though it may not get all the way down to where it once was until we have fully solved the boomer issue. Another bright side to all of this is that if you are a worker, you will have a lot of options open for you. Employers need you, and if yours is not paying you what you are worth, there may be another employer willing to pay more. If you are thinking of a job change, it may still be a good time depending on your sector. For example, if you are in the tech sector, it is not a good time, and hunkering down is more than likely a better strategy. Whereas if you are in the restaurant, construction, or social services industry, there is a serious lack of workers, and a move might just give you more money to invest. The fun does not have to end here, because you can always watch my video on Dollarama that I have linked in the top left corner, or right below that, YouTube will show you a video they think you will like. Your click will decide who is right, and I will see you in the next video.